September has been all gas and no brakes. Every day with a new green candle and a new all-time high. I'm going to go over three very important stocks that have absolutely been ripping with some fresh technicals, as well as where to raise your stop loss to. These are recommendations, not suggestions for what you should buy, sell, or hold. I'm going to talk about three important news stories, and we're going to recap the catalyst that is ahead of us. Obviously, the Fed rate decision Wednesday at 2 p.m. We will get that headline news, and here's what I'm expecting will happen. I believe that the Fed is going to give us a 25 basis point cut, and in that headline news will cause the markets to rip at least 1%. And as the market begins to digest that news, and after we have hit some pretty high highs on a lot of stocks that I've been talking about, we're going to then see that 1% pop on that headline news turn into a 3 to 5% fade. And this is where the next catalyst ahead that we begin to need to watch out for comes into focus, and that is Q3 earnings. Wall Street always buys 2 weeks to 4 weeks before quarterly earnings. We've got big tech will be reporting Q3 earnings around October 15th, and between the end of this month and the beginning of next month, we're going to be looking for a 4 to 5% pullback, maybe only a 3% pullback. And we're going to be looking to take new positions for the next leg up. Let's wait to get that first red candle on high volume because we do not want to be a trapped bear. This is the Stocks with Josh show. Thank you for joining me. Thank you for dropping a heart. Thank you for hitting the like. Thank you for hitting the subscribe to catch the next video. And I have to shout out Michael, aka Spy Lord of the Stocks with Josh Discord. One of my crown traders led a live trade session today. 3 fat wins. A lot of people were celebrating. Great job, Michael, and the rest of the community for locking in those gains. In addition to that, every single day we give you GOAT alerts. Those are my personal trading alerts, as well as my A-plus scalp trades. And we also provide you alerts for just trading shares. There's something in there for everybody. This week, we're bringing out 2 new crown traders. Come and join and trade alongside me live when the Fed goes to speak. I'm expecting fireworks, and I'm expecting the ATM on Wall Street to print. If you want to join the Discord, go to the name of the show, which is the name of the website, www.stockswithjosh.com. Also, I'm going to be in Hampton, Virginia for a free event called the Iron Sharpens Iron event. It's a faith and finance event where Stock Up with Larry Jones will be speaking, myself a little bit, and Keenan Grace. You'll be able to hear from all three of us. I'll leave a link in the top pinned comment so you can get details on that event. I hope to see you there. So, all right, let's talk about 3 important news stories and 3 important stocks which have been printing big bucks here in the month of September. The first one is Tesla. Now, Tesla, what happened? Why is that stock running up? Well, there's a lot of things, but it didn't hurt the fact that Elon Musk bought $1 billion of his own shares. And you've heard it said before, people sell shares for a lot of reasons, but they usually only buy shares for one reason, and that's because they believe that they're going to make some money doing it. Elon bought $1 billion of Tesla, and it gave Tesla a beautiful day. Now, in the Stocks with Josh Discord on Saturday, I did a special video for my community, and I highlighted the fact that Tesla had left off Friday with an extremely bullish candle that signaled an additional pump higher going into this week. I'm going to take you into the Tesla chart, and I'm going to show you something I like about it still. Let's go check that out. Now, the number one thing I want you guys to be watching out for, we're looking at weekly candles, is that the profit zone is going to be somewhere between 430 and 450. There's not a lot of resistance in this area. You can see that by looking at the visual range volume profile on the right here. But most importantly, it's the momentum indicators. In the MACD, we're seeing the histogram lines separate, and there's plenty of room ahead for momentum to continue to pick up. And so the opportunity for Tesla may not be over. Now, what I don't like was the candle that we got today. We ran up to this 430 range, and then we began to sell off. But because the momentum indicators still seem bullish, I believe that we still have the opportunity to hit this 430 to 450 range. Now, in my Friday video and in my Saturday video, I talked about the fact that this was going to turn out to be a huge neckline and that we would come up into this range, likely get rejected, come back and make the handle for this extremely bullish pattern on a high time frame, leaving us to believe that, yes, this could get up between $600 to $800. Now, what I want you to do is not to only take away the fact that I said this could get up to $600 to $800 because it has to do some things. It's an if-then scenario. One, based on that candle on Saturday, I predicted that we were going to go higher today. We did. But now we've got to watch this very carefully to see that that red candle that we got today, that we go back to the top of it and continue to break higher. If we do, then 430 to 450 comes into play. And then after that comes into play, like I said, I'm expecting some pullback and some rejection, bringing us back beneath 400. And if you noticed on that chart, the stop loss was 396.50. So you've got a trade plan there. You've got my trade plan there. Let me know what you're doing with Tesla. Personally, Tesla's been a good stock to only buy. If you take a step back and you overlook all the drama between Elon and Trump and those dynamics, the fact is this company has been doing very well. The stock price has been consistently climbing over the last 5 years, and so it's been a good investment. All right, let's talk about another huge winner, a stock that had an incredible day, and that's Google. Now, obviously, Google was the stock pick that I gave at the beginning of the month of September as my best stock to buy and hold this month, and it's hit an incredible high. Why did it do that? Well, I'll get into that in just a minute, but we also have to acknowledge that today it joined an elite group of stocks, Microsoft, Apple, and NVIDIA, becoming a $3 trillion market cap company. Now, what does that mean and why is that important? It's a one-of-a-kind entity that has a massive moat that it would take a lot of companies and a lot of money, billions and billions and billions of dollars to try to catch up with them. And what happened today is the market is still running off of the bullish catalyst event of their favorable antitrust ruling that they got earlier this month. Let me share it again. The U.S. Department of Justice had sought sweeping penalties, including forcing Google to divest its Chrome browser after a district court found the company held an illegal monopoly in search and related advertising. However, Judge Amit Mehta rejected the harshest remedies, easing investors' concerns and fueling a sharp rally in Alphabet shares. What happened exactly? Well, the bottom line is that regulators gave Google a slap on the wrist. And here's the thing that we're running into, which is a little bit scary and a topic for another conversation. It's that nations can't afford to not support their big tech leaders, companies that simply can or cannot compete with these large big tech companies. It's why stocks like Google, Microsoft, Meta ran consistently in 2023 and 2024, and it's still why they're running here in 2025. But here's what I specifically liked about this news event today and why the stock is ripping is because when Donald Trump was asked about it, he said, well, Alphabet's had a very good day. And what it means is that right now, Trump's not looking to put a wet blanket on these big tech companies, allowing them the room to move. So let's go look at the chart. Let's look at stop losses and potential take profits. Very important. This is a fib extension level that needs to be on everybody's chart. And you can see that we've gotten pretty close. And you can also see we've had price expansion at resistance today, which is pretty bullish. I am expecting this to hit 256. This is where I'm going to be looking to lock in the gains because as I mentioned at the beginning of the video, I think we're going to continue to pump, but I think we will get a 3 to 5% pullback. So you're either going to be taking some profit here or getting stopped out here later on. That to me seems to be the window. You got to remember, I brought this to everybody's attention right here, and I said this move was absolutely going to continue through the month of September. And wow, have we moved. We've moved all the way from 227 to today. We hit 252. And as you can see, I'm calling out this move to 256 to 272. And this bald candle here indicates no rejection or slowdown on the part of Wall Street just yet, which means there's plenty of gas in the tank. Now, what I do need to warn you guys about that is not the case for Google, that was the case for Tesla, is that the momentum indicators are pretty darn hot. Specifically, if you go to the RSI, we are operating in absolute critical danger zone here at around 88%, which is unusually hot for Google. You can see as you go back in time that very rarely have we gotten this high, only occasionally, and then shortly after that, it's led to a sell-off. Very uncharacteristic for Google to run this hot. And it doesn't normally get up there. You can see based on that price I just gave you that it's been a very long time since it's been up there. And we have been up there and sustaining that range for quite a while, which means that this thing will overheat and it will pull back. And so this is a profit-taking window for me, but I'm waiting for a little bit more. I think 256 is that perfect spot to lock in gains. I did take a little profit today after I've talked about this stock most of the month. This is one of the first signals where I'm telling you I'm nearing profit taking and beginning to close a little bit of the position. I still believe that we've got opportunity to hit that 256 target before this move is over. Well, let me know what you guys are doing with your Google. It's been one heck of a run, hasn't it? Okay, let's talk about the last one, which is Alibaba. These are winners that keep winning. And let's talk about why Alibaba is running and the opportunity there. Is it like Tesla with plenty of momentum room to the upside? Or is it like Google getting overheated? Specifically, the good news surrounding Baba is all about their leadership position in AI. And more specifically, very similar to what I talked about with Google, now is not the time for President Xi to be cracking down on his big tech leaders. It's time for him to take a step to the side and let them do what they do so that they can become independent from companies like NVIDIA, which you know they want to do. So what's new specifically? Alibaba and Baidu, we're keeping our eyes on Baidu even though I don't talk about it all the time, have started using self-developed AI chips to train their models, reducing reliance on NVIDIA's chips. September 11th, it was reported by Reuters that China's Alibaba and Baidu have started using internally designed chips to train their AI models, partly replacing those made by NVIDIA, which simply means that these guys have finally been let loose to be the profitable company that they have really always been. They've been extremely undervalued, and I think this stock could run quite a bit. Let me take you into the chart there. I said from the very beginning of this, when I gave this video alert here back at 133, I said we are going to get to 160. We got to 160 pre-market, okay? Now, we are right at the profit zone, and very similar to Tesla, we got a little red candle, right? Now, are we intimidated? No. I think this thing actually could go as high as 190, but the potential take profit zone that I think a lot of people need to be eyeing is between 160 to 170. And I've got some stop losses that you need to pay attention to. If you want a tight stop loss where you protect more of your capital, then that to me is 153.90. If you want to give a little wider stop loss where you give it room to breathe, which means it could come down back underneath 154, well, that's going to be 149.90. I'm keeping mine at 149.90. I alerted this here at 134. We're all the way up here at 160. And I do think that this week we will see this profit zone get realized. And this is where I am going to be locking in my gains. It's not because it couldn't go to 190, right? It's just that it's pumping right now. We've held strong all the way up until this point, and you've got to have a take profit strategy. I had it here. These are my price points, and I'm going to see if they get hit. I'm going to lock in those gains. And then I'm going to be looking for that pullback that I've been anticipating here after we get the Fed rate cut, more towards the end of this month. I don't think it's going to be too dramatic. It might be as little as 3, might be as much as 5, but we're going to get some sort of a pullback before we go into Q3 earnings because Wall Street wants to buy the dip. The question is, once we get that pullback, are you going to panic sell only for them to gobble up your shares? I'd love to hear from you. What is your view? At the moment, the market is absolutely hot, absolutely trending higher, and it's paid to hold risk and to go long. That's how I've been sitting, and so far, September, like August and July, has been a very profitable month. We're going to keep doing what we're doing. I appreciate you guys being part of it. Join the Stocks with Josh Discord. Meet me in Hampton, Virginia. Peace and blessings to all of you. Hit that like and that subscribe before you head out. I'll see you in the next video.